Imagine living in a society where your money has the amazing capacity to increase and double itself exponentially over time, opening the door to unfathomable prosperity. Today, I'd like to urge you to explore the fascinating world of compounding, where even tiny amounts invested can result in great financial success. Prepare to set off on a thrilling journey as we unlock the mysteries of compounding and give you tools you need to change your financial future. Compounding stands out in the realm of personal finance as a tried and true method for building long-term wealth. Compounding refers to the idea of reinvesting your profits in order to have them produce more returns over time. Utilizing the benefits of compounding, people have the potential to build large wealth and reach their financial objectives. The concepts of compounding as well as its advantages will be covered in this video, along with some of the top compounding assets that can help you achieve financial success. Welcome to the Wealth Builder Den, your way to financial freedom. We'll help you make good investments and informed financial decisions to build your wealth. Subscribe to the channel. We'll share investment tips and tricks on how to save money and becoming wealthy. Don't forget to click the notification bell to be updated. This will help you avoid wasting any more money. Now, let's get straight into the videos. Let's first define compounding before talking about the top compounding assets. Compounding's extraordinary capacity to expand investments exponentially over time has led to comparisons to the eighth wonder of the world. Reinvesting profits, dividends, or interest from an early investment to produce further returns over time is known as compounding. Compounding's ability to produce income on both the principal and the accumulated returns is what makes it so magical. This compounding impact speeds up with time, leading to a large increase in wealth. The snowball of wealth accumulation, which is the compounding effect, is an effective way to explain it. Let's think about a real-world example to better understand compounding's potential. Let's say you put $10,000 into an asset that over a 30-year period yields an average yearly return of 8%. Your initial $10,000 investment increases by 8% in the first year, adding $800 to it. The updated total now is $10,800. Applying the 8% return to the increased sum of $10,800 in the second year results in an extra $864. At this time, the total amount is $11,664. Compounding continues, and when the 8% return is applied to $11,664, $933.12 is produced. The final amount is $12,597.12. Due to the compounding impact, growth gets more substantial as the years go by. The $10,000 initial investment would have increased to over $100,000 over 30 years. In addition to the initial investment, interest is also earned on the interest that has accrued over the course of prior years. The growth potential of investments is greatly increased over time by this compounding impact. Compounding can provide significant wealth over a long investing horizon. Now that we have a better understanding of compounding, let's look at the 4 best assets that have contributed to the wealth and prosperity of today's wealthy. Number 1. Stocks. Stock and equity investing is a well-liked long-term method for creating wealth through compounding. The majority of other asset types have historically underperformed the stock market over time. Over time, businesses that consistently grow have solid financials and have a competitive advantage, typically providing greater returns. Compounding can be benefited from by investing across a diverse range of fundamentally strong companies. Stocks have delivered 7 to 10% annual returns on average throughout the years. Say you put $10,000 into a well-balanced stock portfolio. Your investment might increase to about $21,589 after 10 years, assuming an average yearly return of 8%. Number 2. Real estate or rental properties. The ability of real-time investments to compound has been demonstrated. Rental properties in particular can produce a steady cash flow, and since property values often increase over time, investing in real estate presents an appealing potential to compound wealth. You can reinvest rental money from assets to buy more properties, thereby expanding your real estate portfolio and raising prospective returns. Real estate investment trusts, or REITs, also offer the chance for compounding in passive real estate investments. For instance, you might buy $200,000 for a rental property, put down 20% of that amount, or $40,000, and then borrow the remaining $160,000 through a mortgage. The overall return on investment after 20 years can reach $500,000 if the property generates a net yearly rental income of 6% or $12,000, and the property value increases at an average rate of 3% per year. You can use the compounding effect to amass considerable wealth over time by reinvesting the rental revenue and keeping the property. Number 3. Stocks that pay dividends. Stocks that pay dividends are those owned by businesses that pay dividends to shareholders as a way of sharing their profits. These stocks are desirable compounding assets because they have the ability to increase in value, generate consistent income, and generate passive income. Here are several ways dividend-paying companies might help you build wealth. Dividends, which are normally distributed on a quarterly or annual basis, give investors a reliable source of income. This revenue can be invested again to buy more shares, hastening the compounding process. Companies' dividend yields differ, and the higher yield indicates that a greater portion of the stock price will be distributed as dividends. Stocks that pay dividends and capital appreciation are both possible. The stock price often rises as the business expands and becomes more successful, resulting in financial gains. By reinvesting dividends and letting the shares' value rise over time, investors can benefit from the compounding effect on income and capital gains. You should take into account elements like dividend yield, payout ratio, and the company's financial stability in order to approach dividend-paying companies in a balanced manner. Choosing well-established businesses with a history of regular dividend payments and a track record of raising dividends over time is a wise strategy. Known as dividend aristocrats, these businesses are frequently thought of as wise investments because they have elevated their dividends for at least 25 years in a row. Consider investing $100,000 in a diversified portfolio of dividend-paying equities to provide an example of the possible wealth growth via dividend-paying stocks. The portfolio's dividend yield is 3%. Accordingly, the investor can anticipate receiving $3,000 in annual dividend income for every $100,000 invested. The cumulative effect becomes apparent over time. You will receive a significant growth earnings of $278,647 if you choose to hold the investment for a period of 20 years at an average yearly stock price growth of 5% each year. Number 4. Savings accounts with high yields. When compared to typical savings accounts, a high-yield savings account provides a competitively higher interest rate. Since it doesn't need a sizable initial commitment upfront, this is the simplest compounding asset to start investing in. Even while the returns might not be as large as those from other types of investments, they offer a secure and convenient approach to building wealth. Let's imagine someone places $10,000 in a 2% yearly interest-bearing high-yield savings account. If the return is compounded annually over a 10-year period, the investment may increase to about $12,189. The interest can build up over time due to the compounding effect, which helps the account's total growth. Savings accounts with high yields are best used for short to medium-term objectives or as an emergency reserve. They offer a secure and convenient alternative for anyone who wants to protect their wealth while still reaping the benefits of compound interest. Additionally, some high-yield savings accounts include the ease of online banking, making it simple for people to monitor their progress and manage their money. You will be excited to learn about the advantages of compounding. 1. Growing exponentially. The earlier you begin investing, the longer your money has to compound and increase. Your earnings will increase exponentially as a result of the wonder of compounding, which takes time to work. Due to the compounding effect, compounding allows for exponential growth, and as time goes on, the rate at which money amasses accelerates. This implies that even little investments have the potential to generate large wealth given enough time. 2. Income from passive sources. Individuals can produce passive income through compounding. Reinvesting earnings allows people to start a cycle that generates extra returns that may be reinvested again without their having to work hard for them. As it grows over time, this passive income can offer monetary security and freedom. 3. Decreasing risk of inflation. Compounding serves as an inflation protection. Over time, inflation reduces the value of money. Investments that provide returns above the inflation rate might assist people in maintaining their purchasing power as the value of money declines over time as a result of inflation. Number 4. Mental advantages. Observing the development of your investments over time can psychologically teach patience and discipline. Seeing investments increase in value over time emphasizes how crucial it is to maintain an investment strategy and refrain from making snap judgments on fluctuating market swings. For a successful financial future, this mindset is essential. A significant technique for accumulating wealth, compounding can assist people in reaching their financial objectives. Individuals can unleash the potential for long-term by comprehending the concepts of compounding and making strategic investments in assets that compound. The secret is to start early, diversify your investments, and reinvest earnings to take advantage of compounding, whether you're investing in stocks, real estate, or savings and retirement accounts. Keep in mind that compounding requires patience, self-control, and a long-term outlook. But with time, it has the ability to make you financially stable and even rich. By taking care of your financial future, you can see your wealth skyrocket. Now I hope you guys learned some useful information from this video. We appreciate you for staying till the end. Let us know what you think in the comments section below. Kindly click the like, subscribe, and notification bell icons if you think this video will help you in your future financial decisions. Visit our channel for more financial knowledge, building your wealth, and investment tips and tricks videos that you don't want to miss out. Have a great day and see you in our next video.